Since mid-June, the Canadian dollar has lost almost 9% of its value against the US dollar. Now, not coincidentally, crude oil has lost over 30% in the same time frame. Historically, crude and the Canadian dollar traded a high correlation due to the export relationship Canada has with the United States. Now, just this week, the U.S. government announced more sales from the Strategic Petroleum Reserve in order to provide some relief at the pump, which appears to be weighing on the price of crude. Of course, there are other factors that may be headwinds for the Canadian dollar. Inflation, although stubbornly high in both Canada and the U.S., appears to be slightly less of a problem in Canada, as their CPI data has been trending lower from a high above 8% in June to a current 6.9% on the October 19th read. And October 27th, we'll hear from the Bank of Canada for future guidance on rate policy. Of course, most of the world's currencies have fallen in relation to the US dollar as the Fed continues its singular focus on containing inflation quickly. The CME FedWatch tool is currently showing a 73% chance that the Fed will hike 75 basis points at each of the next two FOMC meetings. The Canadian dollar, though, has fared far better than the European currencies and the Japanese yen, as those currencies have made multi-decade lows, while the loonie is only slightly below its 5-year average. Now, CME Group offers 3 different size currency contracts, the standard, the mini, and the micro, in order to match a trader up with their preferred risk tolerance. We're going to be using the micro in these examples. If a trader believes that the Canadian dollar could continue lower from here, they could express that by selling the December micro Canadian dollar futures contract at spot 7270 and targeting a move to 2020 congestion area of spot 7000. A stop for this trade could be placed above at spot 7410. This trade could make $270 if the target is reached and risks $140 if you're stopped out of your level. Now, if a trader believes the Canadian dollar could rally from here, they could express that by buying the December micro Canadian dollar futures contract at spot 7270 and targeting a move up to spot 7600. A stop for this trade could be placed below at near-term lows of spot 7100. This trade could make $330 if the target is reached and risks $170 if you're stopped out of your level.